GM, we are live. Welcome back to The Big Picture, where we unpack the intersection of crypto, of macro, and politics. Now, we've got Mike Reed from Franklin Templeton who's going to be joining us today. And in the unlikely scenario that you've been living under a rock or you haven't heard that name, Franklin Templeton manages $1.7 trillion in assets. They're absolutely massive. One of the oldest names in TradFi, one of the most respected names in traditional finance. You'll probably recognize the logo. It's got a face of Benjamin Franklin, one of the founding fathers of the US, who famously said, "A penny saved is a penny earned." So again, definitely a traditional name, a household name in TradFi. However, and this is where it gets interesting for us. Over the last 2 years or so, arguably they've become one of the most aggressive TradFi companies that are entering crypto, entering digital assets as a whole. Their CEO, Jenny Johnson, famously said, tokenization is securitization done on steroids. So curious to see where Mike Reed stands as far as crypto goes, as far as where we are in the cycle. And Thomas and I are going to be picking his brain for you. Now, the last time we spoke to him was in Breakpoint in Abu Dhabi. And we discovered, this kind of surprised us, that he's one of those rare humans who operate perfectly both in the TradFi world and at the same time managed to have a solid grasp of everything that's happening on chain as well. So again, very excited to catch up with him, get a sense of how TradFi feels about crypto today, because my current take on it is that we're not exactly where we were in December, at least as far as the sentiment during Breakpoint in Abu Dhabi goes. We're not quite there at the moment. We have slightly moved out of that extreme fear section on the fear and greed index. But again, very curious to see how trillion-dollar asset managers are thinking about crypto, thinking about digital assets as a whole. And for you, our audience members, our listeners, this is one of those rare occasions where you have an opportunity to talk directly or indirectly to a trillion-dollar asset manager. If you do have any questions, drop them in the comments and we'll do our best to bring them up with Mike. TB, we had a million potential questions going into this conversation. It was difficult to sort of narrow them down. What's the sort of single topic or question that you're most looking forward to bringing up with Mike?
Yeah, so first of all, I can't wait to be talking to Mike again. He was great in Abu Dhabi, so for him to come on is fantastic. And honestly, yeah, I mean, we've got a lot going on, a lot that we really need to talk to him about. You know, I've been kind of going back and forth on a lot of things lately. You know, we did just have the drift exploit with $285 million gone. So, you know, naturally, when something like that happens, I've been having some dark thoughts about DeFi. And, you know, while I've been having those thoughts, you look at what Franklin Templeton has been doing, and it looks like they just went deeper into crypto than pretty much any TradFi firm has. You know, they acquired a whole crypto team. They're staking Sol in an ETF. They're putting their money, you know, where their mouth is. They've got a market fund on Solana. So yeah, I mean, I want to hear how the biggest players in traditional finance are thinking about this. What they're thinking about when it comes to risk, value, and where all this actually goes, right? You know, I've put together a long list of questions. We'll see how many we can get to, but you know, a lot kind of surrounding Sol the asset versus Solana the blockchain, and you know, I think things might get a little spicy.
I hope so. I do hope they get spicy. Just to sort of reiterate how much of a surprise it was when we had that conversation with Mike in our live stream booth in Abu Dhabi, which at the time we kept going on about, you know, it's the capital of capital and all these trillion-dollar asset managers are here in the SolanaFloor booth during our live stream. And we're talking to the degens, you know, the crypto OGs, the DeFi OGs, but at the same time, we had these trillion-dollar asset managers coming to talk to us and share their hot takes, their spicy takes. The sentiment there was, I want to say, quite different to what it is now as a whole. However, the let's call it a discrepancy. The discrepancy between crypto native sentiment and TradFi sentiment as far as crypto goes, I think is relatively similar. They seemed, the men in suits, they seemed a lot more bullish on crypto than we were at the time. Bearing in mind, it had been sort of 3 months of down only as far as price action went. Back then in December, we've had another few very difficult months as far as price goes. But we've also just partially survived this $285 million hack exploit, social engineering result from Drift. And the entire Solana ecosystem is definitely reeling from that. Our heart goes out to anyone that was impacted by that. At least 20 protocols, to the best of my knowledge, were impacted to varying degrees. Some had a vast majority of their funds, if not all, custodied on Drift. Others had much smaller amounts. So that's kind of the crux of the conversation that I want to pick Mike's brain about. We were where we were in December. We are where we are now. Has your opinion changed? Because crypto Twitter doesn't seem to have changed much.
Yeah, and I mean, when we spoke to him in Abu Dhabi, he was talking about they're building for the long term, right? So I would assume that they have, some sort of risk framework already, in place as they're moving into crypto, and as they're putting so much, capital and like mental work into actually onboarding into crypto, right? So it's been exciting to see them come on board, and I want to see, how are they thinking about this? How should we be thinking about this? And we've been talking a lot about how these institutions and even a lot of people in the AI area are more bullish on crypto than a lot of people that are in crypto. So it'll definitely be interesting to hear.
It is going to be super interesting to hear. And with that, let's cue some spicy questions from Mike Reed from Franklin Templeton. He is joining us now. Mike, welcome to the big picture. Welcome back to SolanaFloor. First of all, I really appreciate you making time to chat with us today. Now, for anyone who's watching for the first time, meeting you for the first time, could you give us a quick 20-second overview of your role at Franklin Templeton? And I guess also what you're most focused on right now, because a lot of news has been coming from Franklin lately.
20 seconds?
That's all you get.
Okay. I help to lead the partnership effort and commercialization effort for everything we do in digital assets at Franklin Templeton. We have so much going on. I can't. The 20 seconds. That's not fair. But a lot of things going on. Acquisition announcements, product launches, like a whole bunch of really exciting things happening right
now. About the new division launch under Sandy, we want to talk about. All the bullish stuff that you guys have been working on in the background, we also want to talk about. But we want to start this conversation by, I guess, setting the scene. The last time we spoke was in Abu Dhabi during Breakpoint conference. I was just telling Thomas Bahamas here how sentiment in Abu Dhabi on the ground seemed extremely bullish. But there was still a bit of a divergence between what crypto Twitter feels and what the institutions feel. I feel that divergence has sort of remained. But I get the impression that you guys are even more bullish than you were, and we're even more bearish than we were on the CT side. So try and help me make sense of that. What are you working on that makes you as bullish as you are currently?
Yeah, I think there's a whole bunch of things we're working on. The first would be, we announced the 250 digital acquisition and the development of the whole new Franklin crypto, which you mentioned earlier. That is, for us, this is a legitimate asset class. We have specialty investment managers like SIMs across a whole bunch of different disciplines. We had developed some crypto research and investment capabilities, and this is just bolstering that effort. So really, really excited about the things going on there. And it felt like a really good entry point for us in the market. So that's one thing that we're working on that we're super excited and gets us really fired up about it. Anytime our firm has a history and a legacy. So by way of background, I started with the company in the mailroom in the 90s and was part of the Templeton organization before the Franklin Templeton merger. So I've seen so many acquisitions over the years, and we have a legacy and history of these types of moves when the time is right. And the time really felt right for us right now for this one. So I'd say that's like one thing. We could do a whole podcast on just that, quite frankly. Another thing that makes us really excited is the institutional adoption. And I remember really specifically when we were, by the way, before I don't want this to go past that screen protector you gave me. I don't know if you remember it.
Yes.
On the phone, working great. Thank you so much for it.
Excellent. Excellent. Great to hear it.
I'd show you, but you wouldn't be able to see the screen. Just kidding. But it's on there. You asked a question about bullish. Why are institutions so bullish on crypto? And I talked more about blockchain. And I think that bullishness on blockchain and building has only accelerated since we were together. So many institutions are out there, and not just pilot projects. It felt like there were a lot of people dancing around in these different ecosystems, trying things out, seeing if there were transactions that could work, doing dummy transactions all over the place. Now we're seeing real building going on. So whether it be, traditional treasury, like corporate treasury, looking into this space and thinking about how they can allocate both to crypto and also incorporate the blockchain technology into their existing infrastructure. You're seeing so many more investment managers coming out with crypto departments and digital asset departments that, like, if you go on to any jobs posting website and look at those, the hirings are increasing in that space. So we've seen a lot more institutional adoption from a fundamental building standpoint. So that's been really, really exciting as well. And then the third thing I would mention is that we, selfishly, we have product in this space that's being adopted at a pretty robust rate. We announced the launch of using our asset as collateral in derivatives trading across, I think when we were together, we're across multiple exchanges now. And the adoption rates for that have been really quite high. When you announce these things and you don't quite know how the market's going to take it, and when you get inbound from both crypto natives and traditional investment management firms, that's a huge signal to us that we're making good moves.
So before we continue, I want to talk about this 250 Digital acquisition. It was massive news, but because of where we are in the cycle, because of some of the more negative things that are dominating the headlines at the moment, be it the war in the Middle East, be it the ceasefire that may or may not be functioning, be it the $285 million drift hack, I feel like it sort of didn't get enough attention as it should have done. So essentially, and correct me if I'm wrong here, there's an entirely new division called Franklin Crypto. We love to see it. Sandy, who's big name, I'm sure many people here have heard of her and listened to her podcast episodes as well. She said something that sort of caught my eye. She said the recent sell-off that we've experienced over the last 6 months or so, it's created a very unique opportunity to pull the trigger. Now, could you walk me through that thinking? You mentioned that you felt the time is right, and Franklin is known for making big moves when you guys feel the time is right. So yeah, talk me through Franklin Crypto. Why does now feel like the right time? And I guess why doesn't the rest of crypto feel like now is the right time to pull the trigger? Everyone sort of feels like they're running for the sidelines and not quite ready to allocate, but you guys don't feel that way.
I mean, buy low, sell high, that's like classic investment ideology. And we believe fundamentally in this space, these are real businesses with real cash flow and real live investment opportunity going forward. And it's really, so taking a step back, when you first, I don't know if you remember the time when you first heard of crypto. In the beginning, Bitcoin is the same as Ethereum, is the same as Solana, is the same as Doge, is the same, it's all just these nebulous things, is the same as an NFT. Like they're all just these nebulous things. And then when you start to learn about the actual value, that the value generation that's happening here, you get really, really passionate and excited about the space. My 15-year-old came to us in the kitchen a couple months ago and said, "Mom and Dad, I want to invest in crypto." And my wife said, "Kyle, you don't know what you're talking about. You don't understand crypto." And he's like, "Mom, you don't understand. We need like permissionless environments. We need transactions without intermediaries. He was speaking the crypto gospel. He lives in this house, so he's around me quite a bit, but did most of his own research to come up with these things. And he'll ask really intuitive questions. If a 15-year-old can see the investment opportunity here from a real standpoint, not just this is cool, I think it should be, you don't have to do much detective work to figure out that there's real things going on here. So I think fundamentally we believe in the space. And like I said, we have all these investment management units that have been built up, whether it be in private credit, real estate, traditional fixed income, like all these different investment management units. So the fact that we would have an investment management unit in a space that's legitimate and provides opportunity, I don't think that should be a shock to anyone. Regarding like timing, like I said, you want to buy when there's distress in the market. And the leaders at 250 Digital are people who have been in this space. If you've ever been to a crypto event, you've probably run into Chris Perkins at some point. He is everywhere. It's amazing to me. So these are like well-regarded people who we've known for a very long time and have long-standing relationships with. So the chance to be able to include them into our fold was just something that we just couldn't pass up.
And just quickly on the deal as well, I read that it was partially settled in digital assets, in Benji tokens, right? So I get the feeling that that's quite a novel development. I'm not aware of too many other TradFi deals that sort of go down that route. Can you talk to me a little bit about to what extent it was done in fiat versus crypto? Do you have those details? Is it publicly available? And do you expect this to sort of set a precedent going forward as well?
Well, I think what we've done with Benji is, and not to sell Benji, but like what we've done with that asset is created something where it moved, because the money fund, the NAV hopefully stays at $1 all the time, but it yields. And so you can actually send, and the transferability that blockchain allows, allows us to send that asset all over the world atomically. And then we've also created features like intraday yield, which I talked about last time, which was the ability to accrue yield by the second. So you've got this really, really interesting asset that, again, hopefully, please read your prospectus. This is not investment advice, whatever the lawyers would have me say at this moment, but you have an asset that hopefully holds that dollar NAV with these added feature sets that can move around all the time. So using it in a transaction like this just, quite frankly, makes sense. We have had multiple instances where VC firms have used our asset to fund portfolio company investments before, but it's been in the crypto space. Like you said, this TradFi kind of move is totally different. So that's what gets us excited about it. And our vision for Benji going forward is that you're able to transact in this security very similarly to how you transact in other cash type instruments. Again, it's not a cash instrument. It's a fund, it's a security, but this is just like, for us, this was again an idea that came up, and we're like, why don't we do it? Would all the parties be willing to settle in this way? And it would be very exciting to be able to do it. And everyone got really excited about it. And by the way, the folks at 250 Digital, again, because they've known us for a long time, have known about the asset for a long time. So they have great confidence in our ability to settle and move and all that kind of stuff.
Oh, that's amazing. It's one thing for you guys to talk the talk, but it looks like you guys are actually like walking the walk, and you're using crypto as it's meant to be used with this. So I love hearing that. And to kind of get into a little bit more of blockchain use, I know that you guys have said that Franklin Templeton mints authentically on chain. It's like the blockchain is your book of records with no third-party ledger. Is that, I mean, I think that that's like a lot bigger than what people would normally understand that as, right? Like, do you want to kind of explain why that matters? Maybe like the quick version of why that distinction is so important at an institutional scale.
Yeah, sure. Institutions are always looking at worst case scenario and like what happens in a catastrophic event. By minting the asset on chain authentically, there is no as of timestamp on where it sits. I know I'm telling you, you know this already, but like, so if I send that asset to someone at 2 a.m, it authentically settles at 2 a.m and lives in their account. We don't, traditional transfer agent book of records that are open and working on market hours, you don't have to wait for those books to open for the asset to settle if it lives authentically on chain. If you have everything, if you have all the guts of it and you're just running a traditional mutual fund or a traditional security with it's like a receipt token or something like that, what lives on chain, the books don't reconcile until the TA opens. So if you're thinking about things from an institutional standpoint, like legal recourse, settlement finality, stuff like that, like what happens if I have some kind of a legal event in the middle of the night and I need to get access to my assets? Am I going through a third party who's tokenized the asset to get to my underlying? Where does it live? When do I actually take control of the assets? Like to the minute, when does that actually happen? Blockchain makes all of that not really in question. So for institutions, this is a massive jump in how settlement can occur. And then when you add to it the fact that you can add functionality benefits, that's where you take that kind of quantum leap. That's where it goes to the next level. When we first launched Benji, I'll be really candid about it, we showed it to some traditional institutions and their reaction was very like, who cares? They're like, we have money funds, they work. This is in some ways worse than what we have already because now we have to own a wallet. What do I do with that? How does that all work? And so it became apparent to us really, really fast that you have to add functional benefit to the asset that will drive adoption. And by doing things like intraday yield, we've been able to add those functional benefits. And that's where that kind of hockey stick adoption rate has started to occur for us.
Yeah, 100%. And now you did mention custody in there. I feel like this has been a lot on, it's been like front of mind for me. And I think a lot of people in the Solana community, especially right now, they're debating, all right, how do I custody my funds? And I think a lot of people are kind of taking a look at ETFs like what you guys have. And, originally people were looking at them like this is for TradFi people, right? Not for me. But honestly, it's like the more that we look into custody and see how tough it is for big organizations, you know, it's like ETFs like yours might actually be a pretty simple solution for people to get, you know, a like a meaningful way to access Solana, right? Or I mean, you guys have a lot of other assets as well, but when I look at it like that, it's, you know, if you're not comfortable with your custody setup, this is a very, very good way to get exposure, right?
Yeah, I mean, it kind of depends on how the person feels. It's a real personal choice.
Yeah.
So again, taking an example from my family, my dad wanted to buy crypto, but was afraid of losing his private keys and what happens if I lose my thumb drive or whatever. And it wasn't until the ETFs launched that he gained comfort with that. Now, again, this is not a crypto native person who understands all that stuff, but he grew up in finance and he understands custody pretty darn well. So
Yeah.
that for the adoption of traditional, it does work for TradFi people in that way, like you said. Crypto natives, we've seen a little bit of adoption from crypto natives in ETF product, and there have actually been the tokenization of some ETFs of crypto native products, and it's going to be interesting to see how that whole dynamic evolves over time. There are things that happen in the crypto market that we just accept as truth that in TradFi would never be allowed to happen. I'll give you an example. The idea that, you know, when you set up a margin account in traditional finance, if your trade goes away from you, you have a cure period to settle, to basically true up your collateral so that it doesn't get called away from you if you want to keep the trade on or however you want to approach it. In crypto, there's a lot of structures out there that don't offer that cure period, and it just the money that if the trade goes away from you, your transaction can go sideways pretty fast. In crypto, we accept that that's trading convention, trading market convention. Again, depending on the project you're working with or protocol or platform or whatever, it can be convention in certain environments. That doesn't work for the TradFi players. So you kind of have to find religion with some of these ideas, and the crypto market players sometimes look at TradFi constructs and are like, no way, I don't want to be involved in anything like that at all. So there's and to that point, sorry, I'm kind of talking on and on here, and if you want me to stop and you can ask more questions, that's fine. But this idea of bringing crypto natives and traditional investors towards the middle to be able to work together is something we're really passionate about. And some of those collateral use cases we've developed, we found that where, like, again, this exact example where like the TradFi institutions are like, that doesn't work for us. The crypto natives, like one group approached us where they didn't have bank accounts. And they were like, we don't have bank accounts. And we're like, well, we fund with fiat. And they're like, well, okay, we'll open a bank account. And then there was no source of funds documentation. And we were like, we need that. And they were like, hey, we're a legitimate thing. And we're like, yeah, we understand you're legitimate. So bringing those groups closer together, closer to the middle is something we're pretty passionate about.
Yeah. And I mean, to be honest, that's one of the biggest stories in crypto, right? That's one of the biggest narratives is the combining of traditional finance and crypto. So for you guys to be working on that and working on both sides of it, it's interesting to see what comes up. And I mean, the way that collateral works in crypto is pretty tough. We've all been instantly liquidated where it'd be nice if that wasn't the case. Now, when you think about like risk framework and how a lot of these DeFi protocols work, like how do you approach, like, the drift exploit just happened, right? $285 million wiped out. You know, it's tragic. A lot of people are looking down on it. Like when you see something like that happen, like how do you guys evaluate that? Right? Like this was one protocol, you know, it wasn't the biggest DeFi protocol on Solana. You know, it was a perps exchange that, you know, mostly was being used for DeFi is what it looks like. So when you see something like this happen, like how are you looking at it? How are you explaining it? Are you guys making adjustments because of it? And what are the takeaways?
Yeah, well, I mean, we haven't, our assets can't participate in DeFi because we have pretty strong KYC controls. Like we have to know our customer at every step of the way. And we've looked at this quite a bit. So this, and by the way, personally, like I engage in some of this stuff myself. So like, well aware of how it all works. As a firm, when we look at it, in the beginning, again, when you come at it from a traditional investment player standpoint, you're like, this kind of thing is not sustainable. It can never work. I need to know my customer. I need, but then as time goes on, you start to see some real value in it. And in traditional finance, there are constructs that play kind of similar roles. So you start to kind of find, I keep saying this phrase, but like find religion with it. For us, it's a challenge because of that component. And then wrap tokens, like if you take an asset and wrap it in something else and then put it out, it's kind of like a derivative at that point. And so you have to gain comfort with the structure of the wrap and what your recourse looks like in some kind of event. The idea that you can move assets from one chain to another and bridge them, and then the shadow asset lives and the original asset lives in the vault, like locked up in the vault. That is a mind-blowing idea to a lot of people. But again, something that us in crypto we accept as this is just part of the way we do business. Just from a data trail alone, that's pretty wild. So when you start to think about, okay, well, I'm going to wrap this in something else, and then it's going to go into DeFi and just kind of move around. How does it get recalled back? Where do the assets go? What's the finality of all of that? Like, how does that end up? These are things that we wrestle with. These are like existential questions much more than they are like
some things to be true, and that's sort of necessary in crypto. And a lot of TradFi people would look at that and say, nah, maybe I'm not quite ready to start playing around with these as an individual, let alone as a sort of publicly traded entity. If we think back to something like 2021, 2022, that was an interesting era where, as far as risk goes, we faced a lot of smart contract risk, a lot of code-related issues. Protocols were vulnerable, and they were being exploited as a result of these sort of vulnerabilities as well. Now it seems we're facing massive risk as an industry from social engineering attacks. DPRK is getting thrown around a lot. You've got this group called Lazarus who have taken billions out of crypto. And I think a good example of this is Drift, right? When we talk about social engineering attacks rather than smart contract vulnerabilities. But it seems that we've sort of overcome one set of issues, and now we're facing a different attack vector altogether. I'm curious if Franklin, for example, is going to start offering trainings or workshops on how to deal with some of these social engineering risks, either for people like you who use DeFi in your day-to-day life, or for some of the newer teams in Franklin Crypto. Is that something that's on your radar?
Absolutely. Yeah, there's large companies out there who've hired people where it was a completely AI generated interview set, answering questions absolutely. This is something that we're trained on all the time, and something we're trying to handle. So the idea of like blindly signing a contract is something we never do at our company. We read through everything. We have lawyers who are looking through everything. So the idea that a contract would come across my desk and I just say, yep, sounds good, and it not having gone through proper channels is a little absurd to me. But absolutely, that's something we're trained in and think about and looking at.
That's good to hear. One of the bigger stories when it comes to RWAs and tokenizing these assets was RWAs plus DeFi. If you bring a lot of these assets, like say you bring $1 trillion of tokenized assets on chain, and then you make them composable, into DeFi protocols where you can have yield, lending, collateral. After seeing what happened with Drift, I'm not sure anymore. Maybe it's RWAs on chain, but not with DeFi, or maybe having that, that KYC hump to get over is the way to do it. How are you guys looking at that?
Maybe. I think in crypto, we have to kind of do a bit of a translation function at sometimes. Like the idea of yield looping, that's leverage. That's classic old school leverage. And again, we've come up with this new term. And even like token burning feels like a share buyback. Like there are these things that kind of mirror each other in traditional finance that are just being replicated in crypto with a fancy new name. So I think some of the stuff that's happening is going to what's going on in these ecosystems. These are growing pains, and I'm not trying to be cavalier or flippant about anybody losing things. These are things that happen, and then you react and get better. You have an outage, you react, you get better.
I think that was kind of the you know, the dark feelings towards the bottom, right? After something like that happens, you have to kind of look in the mirror and say, what am I doing here? But I mean, at the end of the day, you know, having RWAs composable in DeFi, and if you are going to be looping assets like that, having an RWA is a much better asset to be doing that than like something like a meme coin. Much better option than, you know, with your latest meme coin that you're trying to lever or something like that.
I would think so. I would think so. Yeah. But this is, again, not securities advice, not investment advice or anything, anything like that. And I think like a lot of the times, again, like I said, in the beginning, you kind of think value to it. But, you know, like the a little kid, like baseball cards, it was this old thing that was given away in cigarette packs. And then the guy decided he didn't like to promote smoking. So they only print a few of these cards. So worth millions and millions of dollars. But at the end of the day, it's cardboard with ink. And, you know, that's the intrinsic value of it. But the market puts a value on it of something. And so I collect pinball machines, and I'm very well aware that there are things that you could think are worth a lot that the world thinks are worthless. So like the idea that there's assets out there, again, a ton of crypto out there that a lot of people say is worthless, maybe not to the holders, but if you're looking at real intrinsic economic value, there's a ton of stuff that's worth quite a bit. And then when you back it with something in the real world where you're able, and don't forget too, like real world assets, tokenized money funds like what we've built have gained a lot of press. There's a whole bunch of stuff that can be tokenized out there. And the future that we believe in is everything will be tokenized, not just the pooled vehicles, but the underlying as well. So when you start to have these underlyings being tokenized and then the pooled vehicle itself is tokenized, think about like funding and redeeming in kind and how that could look on a micro level for individuals and stuff like that. Like your aperture opens up and the world starts to get pretty excited, and it's all driven by kind of what you're saying with the real world asset inclusion into this space.
Yeah,
just and very quickly before we move on, apologies, something popped into my mind there a second ago, Mike, when you said don't throw the baby out with the proverbial bathwater. I'm curious, your colleagues that work in TradFi, that have worked in TradFi for far longer than we've been alive. Sorry to date them all, but when they think about this recent hack, the $285 million that was exploited from Drift, and I guess it, one way or the changes their perception of DeFi as a whole. They might then add to that the fact that Solana's DeFi TVL across the board fell by about 15%. And maybe that changes their perception of crypto as a whole, of DeFi as a whole as well. I'm curious if, aside from your personal position that we should, again, not throw the baby out with the proverbial bathwater, do your colleagues in TradFi also feel that way? Or is that maybe a bit of a reputational hit as far as the way they consider on-chain risk? What can you tell us? Because you talk to these people, we don't. So I'm really curious also for the audience's sake, how these events shape their view of crypto and DeFi.
Yeah, it absolutely, is it a reputational hit? Absolutely. But it's incumbent on all of us who believe in the space to continue education. And we actually had an internal event at the company where we talked to a whole bunch of people about everything that we're doing in the space. We had like a whole day that we hosted our offices in New York where people came in from all over the company. It was completely internal with some of our external partners, but the external partners were serving like speaker roles and things like that, not so much attendee roles. And it was really great because it got a lot of people. Again, you say some of these things and things that we accept as normal. They're mind-blowing concepts to people when they've never heard of any of this stuff before. And so doing events like that, we have a weekly meeting, which I actually just came from before coming on here, where we just get together and it's open to anyone at the firm, and it's all about just exploring the digital universe. Who's in crypto in the company, who's interested, who's engaged, who wants to know what's going on, and we have different topics and speakers come in regularly. There's no business outcomes that come out of it. It's really just an educational mind share. And doing things like that, we have a responsibility to do stuff like that at firms like ours. And so yes, it causes a problem because people who aren't in the space, red flags are more red flags come up. And but as long as you're doing the education, and you can kind of bring people along slowly. And look, we have partnerships that are public with actors where they've been in the headlines before, and my inbox gets flooded. My messaging system we use internally gets flooded with people asking questions about stuff. Is this legitimate? Is this a problem? What does this post us from a reputational standpoint? All that kind of stuff. And we walk them through things and assess the risk. And if everybody feels good about it, we move forward. So the educational internal dialogue we have here is robust to ensure that what happened, with Drift doesn't kind of sully everybody's opinion on the whole space, and talk about it as, explain it thoroughly and things like that.
That's good to hear. Yeah. And to be honest, like the community's response has actually been pretty great to this, right? Protocols are being built now to inspect people's like current multi-sig to make sure that it's up to speed. So I think that the conversation, is moving the space forward. And I think that everybody is taking a good look at what their security is to take it to the next level. So, and I know that also the Solana Foundation announced Stride. So they've got like a tiered security program that they're going to be giving out. Do you think that that's going to move the needle for a lot of people in traditional finance? Like what would the proper response be from the community, right? It seems like they're at least moving in the right direction.
Yeah, I think anytime you have any kind of incident, you want to have it, see that it was addressed properly, and people are not just trying to sweep it under the rug. And and again, some of the actors that we've dealt with who've been in the headlines, what we look for is like, how did you react to it? We looked at that almost as much as the incident itself. Is like, what was the response? Were things fixed? Did you just basically try and ignore what was happening or respond? So the responses, like you said, the response here have been pretty great by the community for sure.
Mike, I want to zoom out for a second, and I guess this is something that in my mind we don't talk enough about, which is sort of the reason why we launched the show and the reason why we called it The Big Picture, right? Which is that we talk about TradFi appetite for crypto. We talk about how it changes when negative events like the Drift hack happens. We talk about this sort of divergence of crypto native sentiment and TradFi sentiment when it comes to crypto. But what we don't really talk about enough, I think, is some of the knock-on effects of what happens to the participants of this ecosystem as the industry matures. And it is maturing undoubtedly for some of the reasons that we've discussed, but you've got ETFs, TradFi products coming on, institutional capital, massive amounts of it. But we've also got direct representation in the White House now. We're miles beyond the combative SEC regime. And I would argue that we're integrated in people's daily lives in a far more meaningful, significant way. But then the flip side of that is that we're also on the receiving end of geopolitical shocks, truth socials at 3 a.m. that sometimes tend to be unhinged, and all these sort of external factors that we don't really have much control over, but we are on the receiving end of that. Is that something that TradFi is aware of? You're obviously very much in the weeds with it all, but are your colleagues also increasingly aware of the fact that as far as price goes, this is an industry that can get massively impacted by small macro factors that are completely outside of its control?
That's so many industries out there that can get impacted by that. So yeah, the idea that there are like extemporaneous risks, things that are outside of someone's control, is something that every industry has to deal with, and this isn't no different. The difference here is the volatility of the performance is so extreme. And I'm going to use so I worked in fixed income for almost 20 years before engaging in this space. So I'm going to use some of the old school stuff I used to talk about all the time. Anytime you see volatility, you want to first of all, everyone loves upside volatility. No one loves downside volatility, but also volatility, you want to be compensated for the risk that you're taking. And the way that we calculate that kind of rate, it's called a Sharpe ratio in traditional investing, where it's like basically your asset returns minus the risk-free rate divided by your volatility. So it's literally excess return per unit of risk. And there are assets out there which have high risk adjusted returns because the volatility is so low. So the denominator drives that return. There are assets out there, and crypto is a perfect example of it, that have strong risk adjusted returns over longer time periods because the numerator is so strong. So you're getting a lot of return. And so even in my personal account, when I'm looking at what assets I want to invest in, if I'm looking at a space that's really, really volatile, perfect example is this. I just want to make sure I'm getting paid for that vol. And then I allocate in my account according to how much my life can accept the volatility of that. So first screen is, am I getting paid for the risk I'm taking? If the answer is yes, how much risk am I willing to take? Just it's from a life cash flow standpoint. I told you about my son Kyle. Like, I got to make sure that kid's going to college for sure. I got to make sure his 529 plan is funded. So I have to, have these like real life cash flow stability needs. Boy, I'm drifting super far away from the question you asked, so I want to make sure.
No, but this is great, because we're talking about, when we think about crypto being, I guess, the highest beta asset in the room, to your point, and you're having a conversation with a 15-year-old. My curiosity is about how we as crypto natives have come to accept later on in life that this this set of geopolitical risks impacts us significantly. Whereas for you, as the father of a 15-year-old, it's something that you've lived with your whole life. And now it's just about becoming sort of common knowledge within crypto. So, when we think about these geopolitical risks, does Franklin Templeton also change its risk perception, its risk analysis of crypto? Are you guys now having board meetings, for example, and saying, hey, look, political risk is higher than it has been, and volatility as a result of that is going to be, something that we focus more on, for instance?
Yeah, of course. And I would say, like, the thing that you mentioned, like, it's an apolitical statement to say that the current administration is more favorable to crypto than we've seen previous administrations, and that's really helped to bolster a lot of institutional adoption in the space. You said political risk. Maybe I'd say geopolitical risk, right? But again, all assets are subject to that geopolitical risk. So you have to think. When we were together, I don't know if you felt it when you were there, but like, I felt crazy energy in that part of the world, and I was like, I'm really seeing what's happening here, and this feels like the future and everything like that. So the geopolitical risks that have happened since then obviously have put a bit of a damper on that feeling of excitement, but I don't think it's going to go away anytime soon. So you understand these are hopefully short-lived things. We hope that conflicts are resolved quickly, and we can all kind of move on from it. But these types of risks, like I said, they exist in every asset class. And then as an asset manager, your job is to say, okay, do I want to hedge out all of that risk, all of that, like, kind of the beta? Do I want to hedge out that market beta and just take the specific risk of the ideas that I want, or do I want to just let it ride and let it all play out the way that it does? So
but you guys don't clear. I guess this is more clear. I guess this is more of a personal question as well. So I appreciate you being candid with this one. So you're Canadian, if I remember correctly, not American. Yeah. Now we've got a Brit in the room, we've got a Canadian and an American in the room, right? So I think you're the best person to ask about this, because Thomas and I are probably quite biased in terms of our views of this. Probably your American colleagues as well would be relatively biased with this. But political risk as a whole, do you feel that it's going to be less of a problem after November, more of a problem after November? Do you think that the regulatory environment in a sort of nuclear scenario could shift back to where we were under Gary Gensler? And the main reason why I'm asking this is we spoke with Matt Hogan, who I know you've been on podcasts with in the past. We forced him to share his doomsday scenario with us. And he said, I guess that the worst case scenario would be if Elizabeth Warren and that wing of the Democrats sort of took over control again, and they could force some of the regulatory progress that we've made into the background. So as a personal point, as a Canadian, do you share that sort of doomsday scenario? And I guess from a corporate perspective, is that something that's factored into your overall scenario analysis as well?
I would say I'll answer the second part first. Absolutely. From a corporate perspective and like department perspective, we talk about all these risks. We have lobbyists and people who we engage in about the political landscape all the time. So of course. And then from a personal perspective, I mean, I'm Canadian, but I'm married to an American woman. I have 3 American kids. I own real estate in this country and love being here and everything like that. So, and I'm not moving. I'm not planning on leaving anytime soon. So I just try and take a long-term vision with it and see where I think things are going over the longer term. And I feel like I live in a pretty great place. So I'm not over the longer term, I'm not overly worried about it. But yeah, these are trying times. You know, these are interesting times that we're living in right now, and there's a lot of things happening. And depending on where you live in the country, and who your friend group is and things like that, people are reacting different. I don't know. I again, long-term vision with all of this stuff. We play the long game, and by the way, that's personally, but also professionally, we play the long game with this stuff. I think the asset management thing, about that long game idea, there's a lot of people, like the idea of starting up an asset manager is super exciting to a lot of people, and being able to invest in ideas and generate alpha and research companies or industries or whatever. It all sounds like really, really exciting, but you have to have so much patience to have that play out and work properly. And we have seen asset managers in this space expand rapidly and fold, and we've seen a lot of movement and things like that. All of this for us is very, very long game in nature. I mean, we were looking, I told you the last time we were together, like I first heard about crypto 15 years ago, and we were like, what's that all about? And this is not like a new novel thing for us where we're tourists and being like, oh, great, everyone's talking digital assets, let's just get involved there. This is a long game play for us. So the shifting nature of geopolitics and everything like that, things that you have to change and move and pivot and stuff like that, but we're very, very adept at that. So I'm not overly concerned about the doomsday scenario of what could possibly happen that could ruin what we've built. I've made a life and career bet that this is a great place to be in the future. And so yeah, I'm still excited about.
Excellent. I honestly think that's going to be a massive relief for many of the audience members. Personally, it's a relief to hear that maybe some of the sort of doom and gloom driven by headlines isn't necessarily shared by people who realistically analyze these scenarios. So that's great. I want to ask you very, very quickly about the Clarity Act, because the poly market odds of it passing in 2026 in full have recently gone down from about 70% to, I want to say, 61, 62%. The question here is, to what extent the narrative that crypto is finally free from some of these regulatory and political shackles that we've dealt with in the past, the idea that it's completely past that, to what extent does Clarity not passing in 2026 become a blocker, right? Does everything hinge on Clarity? And that 9% drop, that 70 to 61% drop, does that concern you?
I would say long game. I think the thing the markets like best, and we know this from participating in traditional markets, the thing the markets like best is when they know what's going to happen. And, that's why, like the Fed, for example, when they come out and they provide notes and minutes. And the reason they provide those notes and minutes is so that people know exactly what they're thinking about, so that when the next meeting happens, nobody's shocked by the outcomes. So I think regulatory clarity is something that's super important for us as an industry. We're not making choices about how we build or how we invest based on the timing of certain things passing or not, and how that could all work. Again, this is longer term vision. I mean, don't forget, we launched Benji 5 years ago. We were dealing with Gensler's office all the time, and we had a super collaborative relationship with them. So we managed to launch that project then. It's not impossible. You just have to, two things. I always say this: you can be collaborative with your regulators or combative with your regulators. And we choose to be collaborative around the world with all the regulatory bodies we engage in, because quite frankly, A, it's helpful, but B, a lot of the times they just want to learn and they want to understand what it all means. So we take that kind of approach. We provide webinars. In some cases, we've provided 24-hour hotlines where it's like, you wake up in the middle of the night and have a question about crypto, call. Here, you can call and ask a question. And this is the long game approach that we take to all of it. So I'm not trying to avoid your question about, odds or when things will pass or anything like that. I'm saying, like, to us, the long term of what happens is more important. So then decisions that you make, right? Like, if there's things that come into play that feel like really, really near-term decisions, and you're like, what could happen if another administration takes over, and what could do that? You make decisions based off of all of those scenarios and play long on it. And that's what we do.
We love to hear it. Yeah. I think to kind of go into that a little bit more, I think that even if we don't get, 100% clarity, based on everything, I think we're so much better off now than we were, right? I fall overly optimistic on a lot of this. You know, I'm long America, of course, but I think that the long-term benefits that we're going to see from just what we have already, they outweigh, you know, like a midterm risk in the short run, right? Like in the long term, it's like I just see the whole space moving so far forward.
I'm long America as well. Obviously, I'm American made car. Like I do it. I do the thing, you know. But I would say that when I look at what's happening in certain parts of the world, and we talked about what was happening in the Middle East the last time we were together, what's happening in parts of Asia, you know, there, and even what's happening in parts of Europe too. The regulatory bodies are all moving very, very swiftly. So I'm pro America and really excited about what's happening here in the United States regarding our industry and our space. But if you look globally, things are happening at a really, really rapid pace as well. So I'm pro crypto. That's that. You know, I'm really excited about this space going forward globally.
Yeah. Now, one thing that I've been thinking about too is like the crypto trade is very tied in with America at this point. You know, you mentioned regulations coming from, you know, different foreign governments. Is that something that you guys have to track, or how closely are you looking at the other regulations? Because that could stem growth, right?
Yeah, I mean, we have our Benji construct exists in multiple geographies with multiple regulators. We have constructs where we participate in additional geographies as well. We feel like we blanketed the world with a lot of these constructs, and they only work if the regulatory bodies accept them to be true. So in our space, at least, because again, heavily regulated, KYC, all that kind of stuff. So we're constantly keeping our eyes open on global regulation as well. And even in like people want to paint regions in this like homogenous way and say like this is APAC is this way, and it's not. It's really country by country, and so you have to be aware of what's happening. It's super idiosyncratic. You have to be aware of everywhere.
Yeah. All right. Now, to lighten things up a little bit, we got to talk about just how bullish Franklin Templeton is on Solana, right? I mean, from the start, you guys have been, you know, pretty focused on everything that Solana's been able to do, right? Your digital assets team praised, you know, it was like a single atomic state machine vision. You called out DePIN, DeFi, Fire Dancer. You know, you guys launched your ETF with built-in staking. And I mean, it seems like we have, you know, all the makings are there on Solana, right? I don't think you guys give specific price targets at all, but Standard Charter puts Solana at $2,000 by 2030. You know, do you want to just talk about, you know, go into this bullishness a little bit, give us some hope here, and let us know how you think about that.
No, tell me you don't need hope. This is who I rely on for that hope. No, I think you know, of course, we've been passionate about the ecosystem since we really started engaging in the space, and there's so much diversity of. I told you this before, and the feelings at the last break point didn't dissipate at all. And I attended like an Accelerate speaker series in New York 2 weeks ago, maybe something like that. The breadth and depth of the Solana ecosystem is pretty impressive. It's impressive for anybody who doesn't know the space. It's one that I would point you to kind of learn just how deep everything is going. But for us as an institution, the institutional adoption is what matters more from an economics, from like our business development standpoint. And what we want when we go to a new ecosystem is to have our asset kind of proliferate and be able to. Sorry, can you hear that? Do you hear something in the background? I'm sorry.
Yeah.
Someone coughed.
No worries.
Alerts.
No worries.
So we have like actual business development concerns, right? Because this is all nice, but if we develop a product and nobody uses it, that's no good for us, because we waste a lot of time and energy and economic effort, quite frankly. So what we want to be able to do going forward is to proliferate, and the institutional moves that Solana has made and continues to make. I mean, you attend the meetings. They're my favorite. They're among my favorite crypto events, because of the breadth of attendees. There's a serious business vein that runs through everything that Solana does. So, and we've engaged in transactions with traditional financial players on Solana that have been very, very public. So we continue to be very bullish on the ecosystem.
That sounds good. Now, one thing that I've been seeing a lot on the timeline is increasing bullishness on Solana, the blockchain, right? It's fast. We're bringing all the assets on. It's the everything market, but not as much, bullishness on Sol, the asset. Like, how do you think about the relationship of those two? Do you think it's increased use equals asset price goes up, or what do you think about the relationship between those two?
You have to think that. I mean, the bet that you're making when you buy Sol is that more people are going to need that gas to fuel transactions, right? They're trying to sell block space, I guess. And so more people are going to want that asset, like any commodity out there. So I think they're completely tied. But I think what happens, again, patience is a virtue, but it's also something that's not necessarily prolific in the crypto ecosystem. People want fast trades and stuff like that. And so when we take investment positions, you take a long-term view of these things. And again, patience. You have to wait for these things to play out. So we still believe, we still find that, again, like you said, I can't really talk about like price targets or anything like that, but we do super robust, 30-page write-ups on every token that we look at. So you get pretty, and that's just the write-up. Then you have the conversations with the analysts and understand where they think things are going, and we feel pretty good about it going forward.
Clear. Mike, unfortunately, in the interest of time, we do have to wrap it here. I wish we had booked 2 hours with you. It's been great chatting to you. Been great catching up. I know it's only been, 4 months, almost 4 months to the day since we spoke in Abu Dhabi during Breakpoint. But I feel like so much has happened, and I hope we get to keep in touch and maybe touch base again in another 4 months and see if the sort of CT, crypto native sentiment has caught up to this bullishness that we're seeing from traditional institutions that are allocating to crypto as well. But I just want to say thank you again. Really appreciate your time. And hopefully we catch up very, very soon.
That would be great. Yeah, no, I love talking to you guys. So thanks for having me again. Appreciate it.
Excellent. Now, ladies and gentlemen, before you go anywhere, I would like to ask you to subscribe to SolanaFloor if you do want more of these macro takes, because next week, Thursday, same time, 11 a.m. ET, we're going to be talking with James Seifert from Bloomberg Intelligence. He's going to answer all of your ETF-related questions, all of your institutional capital and allocation-related questions. And he's also just very clued in when it comes to the on-chain reality that we're dealing with, when it comes to the price suppression that we're dealing with. And any questions you have, maybe you want to send them in earlier, but it's a great time during the stream as well to bring them up. And of course, we will do our best to bring them up with James Seifert. With that, TB, thanks for joining. We will see you all tomorrow for our weekly news recap. And to everyone in the audience, see you all very soon.
Thanks, Jack. Thanks all.